Hey, happy Saturday morning, everybody. Thank you very much for tuning in to check out my video here. Just a little update for you on where the Toronto real estate market is at. Hopefully you're enjoying this over a cup of coffee, something like that. So here to answer the question, what is up with Toronto real estate? So effectively, things are moving along business as usual. You can see that the average resale prices of homes more or less consistent, kind of following a seasonal effect for the Toronto Real Estate Board here. Buyers have not lost confidence. In fact, there's bidding wars going on for a lot of different property types. Doesn't matter if it's freehold, condominium, whatever. And it's all the way across the greater Toronto area, from Burlington to Pickering to Newmarket, and like literally everywhere in between. Now, a lot of this sustainability in price has to do with this chart here, the reduction in new listings down substantially. Historically, now is coming off the busiest time of the year, but this is actually reflecting the opposite. It looks like April and may in fact be the slowest time of year. We'll have to see what the future holds, but for now, because of this reduction in listings, it's culminating in bidding wars on most properties. So buyers are out there, they want to buy stuff, and supporting them are these crazy cheap interest rates. You got fixed 5-year 2.59, variable rate 2.25. You can actually get variable rates as low as about 2.14 and a fixed 5-year around 2.39. So money is very cheap. It's keeping people out there and keeping them purchasing. I've heard even as low as around variable as low as 1.73%. For some of my clients back in April. So money is very cheap and it's keeping the demand going. So if we're looking at month-over-month stats here, you can see showings are up 95%, offer registration 95%, MLS listings are up, exclusives sold up 95%. Things are really moving along well, and if we take a look at the average price here, detached homes are up 2.7%, semis around 8.8%, townhomes more or less flat, condo apartments around 5%. What this doesn't tell you is that the average price of an average home on an average street, if you took that same home from last year and sold it this year, it would actually be up about 10%. But why these numbers don't reflect that in terms of year-over-year percentage price change is that the luxury home sale segment, that market segment has slowed down significantly. So those are homes priced over $1.5 million. If it's south of $1.5 million, things are moving along very well. So that same home, same street is up about 10%, which is not illustrated again because of that collapse or the significant slowdown for the luxury segment. And again, money is just so cheap that people are out there buying today. So you can't really blame them. Now, what's going to happen? I mean, nobody knows what direction the market's going to go, but as long as there's this reduction in listings, there's a lot of people still out there looking to buy. So time's going to tell, but for now, should you buy, should you sell? I think if you're a seller, you should really consider it listed for sale. If you're looking to buy, there's no harm in getting out there and looking and locking in money when it's so cheap, because it's not going to last forever like we saw when money was so cheap a few years ago. Rates went up and so did prices, but ultimately real estate's a long-term hold. And my take as both a homeowner and a property investor is that over the long term, if you hold it for 10, 20 years, you're going to wind up substantially further ahead. So no time like the present to get into it, because I mean, if you wait, you could end up waiting forever and end up getting priced out, which you don't want. So anyways, hope you guys are doing well. Have an awesome weekend. Hopefully we get some nice weather ahead, and take care, and I'll be in touch. Take care.